So we are coming off mute, and it looks like we're getting the signal here from Colin that we are up on the live stream. So, Mr. Finance Committee Chair.
Thank you, Tom. Appreciate it. Good morning, everyone. I'd like to welcome you to the April 22nd, 2021 meeting of the Finance Committee. I'd like to start with asking if we received any public comment.
We have not, sir.
Okay, sounds good. Thank you very much. Actually, we probably should do a roll call. See who's here. So if you could take care of that, please.
All right. Frank Facciano.
Present.
John Hayes.
Here.
Ron Heckman. Larry Hamburger.
Present.
Glenn Reedman.
Present.
And Michael Sturshek.
I'm here.
We have a quorum, sir.
Okay, perfect. Thank you very much. Okay, we're going to start the meeting today with a topic that is near and dear to my heart. And I actually mean that. I geek out on the pension update that we get on an annual basis. I will begin this session, or this part of the agenda, by lobbing my annual complaint that I think our assumed rate of return is too high. That is, I think, the 5th year, Todd, I've raised that issue.
Yeah, I mean, if you didn't say it, I would be concerned.
Exactly. So what I'll do is, go ahead, I'll turn it over to Todd if you want to introduce the people that we have on the call today.
Sure. We have two presenters to kind of give us a short presentation on our pension and where we are. We have Peter Carapello from Foster & Foster, and we have John Kateski from Oakland. Just as a reminder, we're going to do our full pension presentation similar to how we did it last year in October. This is just kind of a quick update on where we are so that John can rest easy at night. All right, at this point, I'll turn it over to Peter, and I see he's ready to go, so we'll turn it over to Peter.
Okay, good morning to everybody. We're going to put the GASB 68 report on the screen or not?
We're working on it for you there, Peter.
Okay, good. That's what I was waiting for.
It is up.
And here, this is the cover page, and this is for the non-union program. You can just stop there. This is called the Governmental Accounting Standards Board Statements. Several years ago, the accounting profession, not the government, the accounting profession, in their all due wisdom that they have, said that the financial statements that they present for an authority, for a municipality, and actually for a corporate plan, should reflect the fact of what is transpiring with the pension program. In essence, it's saying, are there any liabilities that the pension plan has either in excess of their liabilities, their assets being in excess of liabilities, or their assets being less than their liabilities. So this statement is prepared to show those results. Now, the statement is not the valuation report that we prepare as of 1/1/21 that we're going to give you, I guess, at the next meeting, whenever that is, in September. That's the annual valuation, the annual actuarial valuation. But this report is based on the 1/1/19 report that we did, because we do these valuations every 2 years, and we roll forward liabilities that we estimate to be as of 1/1/21, but we use the assets as of 1/1/21, the actual assets. And that's mandated by the accounting profession. This isn't a Foster & Foster approach or an idea. This is the accounting profession requesting and demanding, I would say, that this report be prepared and used by the authority. So if you turn to page, keeping it, let's say, page 9, flip all the way to page 9. This is going to reflect the change in the liability from the prior year, 1/1/20 to 1/1/21. The important aspect is you start out, the total pension liability that was as of 1/1/20, and the next line is that service cost and basic, oops, going down too far. The service cost of $309,000, that's basically the cost of the benefits for 1 year. And then the next number is the contributions that you can see, 461,000. That's what came into the plan. The net investment income, the change in the investment income. So during 1/1/20 to 1/1/21, we calculated $1,034,000 in investment income. The plan paid out $454,000 in benefits. It had $12,000 like in expenses. So the net changes, quote, went from $496,000 to $1,028,000. The result was the balance, the assets in the plan have the liability there. Move it down. This is the total liability is 9,046,000. The pension liability is 8,000,000 up, yeah, 8,096,000. So you have a quote,
Surplus.
$78,000 to the plus. So the plan has $78,000 as of 1/1/21, $78,000 in excess of their liabilities. That means the financial statement, as we understand it, will reflect an addition to the capitalization of the financial statement. So it's a positive number. So that's based, by the way, on that 7.5% interest assumption. And if we change that, numbers do change up or down. And if we go to page 11, we can look at the last 5 years or so of progress. Oh. Okay. And if you look at the line called, move it up a little bit, municipalities' net pension liability. Right now, as you can see, we have a excess in the last column of 78,263. Last year, we were short 453,000. The year before, we were short $1,000,003, et cetera, et cetera. So you can see the progress that you really have made in the last several years. You don't have any excess assets of liabilities, I mean. Now, why is that positive? It's positive because if you don't have any liabilities in excess of your assets, you do not have to amortize and pay off that shortfall each year. A shortfall becomes like a mortgage that you have to pay off. And last year, for the non-union plan, we had a shortfall cost of $132,000. That means when we do the next MMO for year 2022, Todd will not have to budget $132,000 to put into the plan. That is big. So that's a savings that the authority can use for whatever purpose they want. But he doesn't have to contribute $132,000 in excess of the actual cost of the plan to make up for that shortfall in the assets versus liabilities. Any questions so far on that? Okay, if we look at the union plan, and we start out with the same page, 9. Well, why don't we go to page 11? If we look at that same line, municipalities' net pension liability, and if we screen all the way to the last column, the 2020 column, you have $522,000 in excess assets over liabilities, and consequently, you're 108% funded, while in the non-union plan, you had $78,000 and you were about 100% funded, 101% funded. So the same principles apply here. There is going to be a cost saving when Todd does the MMO for 2022, and that cost saving will be about $77,000. So between the two plans, there's a cost saving of about $210,000 due to excellent investment performance, and very importantly, Todd has made the contributions in accordance with the MMO in the past, and at one point, there was more money maybe put in than was necessary. So all in all, as of 1/1/21, the plan is in super shape. And like I said, it's the investments, it's the contributions, and I'm willing to respond to any questions.
Thank you, Peter. Do we have any questions from the committee or any of the board members in attendance?
Hey, Peter, I just want to clarify one thing. You refer to it as 1/1/21. There is a small accounting variance because most of the stuff is as of 12/31/20. There is a big difference because our fiscal year ends. So all of those comparisons, even though it's one day, it is the difference between 12/31/19 and 12/31/20, because that report that we're doing is actually 1/1/21. So that one day does make a difference. But I think
You are correct, sir.
right. And the other thing is we've done a lot of changes to the plan that have helped us as well. So it's a combination of a lot of things, those additional contributions we made when we were able to do that a few years back, good investment performance, and John's going to walk through that. But some of the changes we've made to the plan so that we can fulfill the obligations that we've made to prior employees without making new obligations to new employees. So again, I think overall we should feel good about where we are on the pension. Thanks, Peter.
Yep.
You're welcome.
Yep, thank you, Peter.
John, I think you're up. That's a tough performance to follow, but I think you can do it, John.
Yeah. Well, thanks, guys. Good morning. Let's go over, since we spend a little bit of time on the DB plan already. Let's start with the defined contribution plan.
That's
Yeah.
the defined
You know
plan.
what? The other one. That's the DB. Yeah, so just go to page 2, and so this report is somewhat new to the committee, and the whole process started about 18 months ago, where the internal committee, made up of Todd, Karen, Rebecca, Danita, Zoe, wanted to start putting a program around the defined contribution plans, which the authority has 3 of them: the 457B, the 401A, or 401A for each of the union and non-union plans. And we went in and did a fiduciary review. We had King Spry review all the documents, and just looking at some comparisons across the industry, the committee decided to do a search. And in the fourth quarter, in 2020, just 5-6 months ago, the plans after a public search were transferred to ICMA RC, but since the search completed, they have now changed their name to Mission Square Retirement, which they're rolling that official name change out. I believe it's June 1st. And throughout the process, we were able to significantly lower the operating costs of the plan, and it was in 2 areas: the actual funds that were being used and some of the administrative costs associated with running the plan. And as part of it, we narrowed down the fund lineup. We didn't make the fund lineup less flexible. We just made it less confusing. The plans had different funds in each of them, and each plan had over 40 funds available. We have now narrowed it down to about 16 funds, and we are using institutional and no-load products. And within the fund lineup, there is not only index choices, which the prior fund lineups at MassMutual was lacking, but we've also incorporated some active investment options too. And that, what is that, the 6th bullet point down, this is important. We put balanced funds in there, and those are for the participants that, they don't want to be in there building their own portfolio. They just want to, make a simple choice. I'm either a conservative investor, a moderate investor, or a growth investor. And those are 3 different points on the risk scale. And now they have those choices through Vanguard within the fund lineup. So if they say, hey, I'm nearing retirement, I'm conservative, I'm going to put it in the Vanguard conservative fund. And at that situation, they have about 40% equity, 60% fixed income, compared to the growth fund where it's roughly 80% equity and 20% fixed income. And that last bullet point is really important. With Mission Square / ICMA, LNAA also has a designated participant education professional. I believe he's already been out there, I know once, maybe twice. And that helps support the internal committee from, having to come up with topics and organize, the meetings, semi-annually. Now we have somebody dedicated. It's included into the fee that the plans pay, and I think it's an attractive value add because they have materials built for participant education, and they also, when they do come out to do the participant education, they take time and will do individual meetings with the participants if desired. The next page, this gets into the market values, just so the committee knows. These plans have been around for a while. You can see the effective dates there, and you can see the market value as of year end, and then the March 31st market value of $5.2 million. And these retirement plans are touching almost every employee now, and they are a main retirement vehicle for the new hires. And like I said, you haven't seen a lot of reporting on the defined contribution plans historically. This is something new, and along with the defined benefit or the pension plans, we are going to be presenting this at the regular board meetings. And then the next slide, this gets into some of the investment options. And, we'll just focus on those first 3. So large cap core equity, as discussed, that if the participants want the market, that's an index option where they would get the S&P 500. And then we also have given them the ability to also buy an active fund, which would be the Vanguard Windsor 2 and the T. Rowe Price Growth Stock Fund. So there's an example of in the large cap space where the participants can get the market, passive exposure, or if they want to try to pick some active managers that are attempting to beat, their certain segment of the market, they do have that. And this fund lineup, as we went through it with the committee, the idea is we want to give the participants the ability, no matter what age they are or what they're trying to accomplish, to give them the ability to build a portfolio to meet their objectives. And we believe we've done that. And the cost of this fund lineup is almost literally a third of what the plan was paying at the previous provider. And if you go, I think it's 2 more pages. One more, yeah, right there. So these are the balanced funds that we mentioned. So now the participants have a choice where they can say, hey, I don't want to build my own portfolio, but I realize I need a diversified, balanced portfolio. And these are the Vanguard options that are now in the plan. And another point, I kind of, early on I mentioned it, but now all 3 plans have the exact same fund lineup. So the participants, if they're in the 457 plan, but they also have money in one of the 401A plans, they're not having to learn, different funds. All 3 plans have exactly the same fund lineup, and the participants can move around pretty easily. The following pages are just, you can read these at your leisure. They're just actually snapshots of, okay, yeah, let's just do this, and then we'll go to the DB. I know we're short on time. So the long-term goals of the defined contribution plan is to continue providing fiduciary oversight to the defined contribution plans, continue to educate the employees how to invest for their retirement. The team is spending a lot of time on the participant education. And that third point is something new too, is the new qualified default investment option, meaning if somebody signs up for the plan and they don't make a choice or they don't know what to do, it goes into a balanced portfolio of 40% equity and 60% fixed income. Previously, if somebody signed up and they didn't make a choice, it was going into basically the stable value or money market fund. And we felt that the committee did have, or the authority did have exposure there because, somebody that signs up and they're 25 that goes in the plan, they really shouldn't, have all their money in a stable value fund. So this is an industry accepted allocation for the default. The participants can move away from it at any time, but if they don't make a choice when they enroll in the plan, they will be put into this fund. And the second to the last bullet point, this is important. The approach is now to be proactive with the fund lineup. Some of these plans go back to 1993, 2002, 2007, and the authority never really, rotated the funds out of the plan, even if, one started performing poorly. Now we have put guidelines in place that the funds are going to be monitored relative to fiduciary standards. If we see things changing, at the fund company or the management team, the portfolio management team, we will make a recommendation to the authority and say, hey, remove this fund, and this is the reason why. Where previously they would only be removed if the fund company would merge or stop offering that fund. So that's an important bullet point. And the next few pages, I think there's 8 to 10 of them. It's just the snapshots. They're in alphabetical order. If you really want to dig into each of the fund options, this is the information available to you. You can read it. They're just in alphabetical order. Does anybody have any questions about the defined contribution plans?
I had a quick question. This is Larry Hemberger. What percentage of our people take advantage of these programs?
I'll answer that for you.
Yeah.
The 401As, all of the employees are put into, if they were hired, I believe it was before 2018, they get a flat $300 in there. If they're in a non-union, and then they get an hourly rate if they're in one of the union plans. For employees starting after 2018 on the non-union side, they're getting a contribution of their salary put into that 401A. So all of the 401As, you should have pretty much 100% participation in. The 457s are optional, but you would expect to have more people in there on the non-union because there is a match. So their match, so if I want an extra 3%, we put in 3 on a non-union, but we'll match another 3. So if you start today, if you want to get that match, you have to put the money into the 457. We're really trying to encourage people to start investing in themselves. So we're hoping that that 457 will increase. But all the 401As, you should have 100% participation in. The 457s are optional, but again, because we're encouraging people and giving them incentive, we expect that percentage to even get higher.
Thank you.
Yep.
Other questions?
I think you wanted to. Did you want to touch base quickly on the defined benefit, John?
Yeah.
Okay.
Yeah, maybe, I mean, 3 minutes, or, I mean.
Is it 3 minutes Peter time or 3 minutes? No, no, go ahead, John.
Yeah, so page, just go to page, here's the executive summary, and Peter touched upon it. You know, for the last 5 years, the plans overall after fees have averaged 10% a year versus the actuarial return assumption of 7.5%. And, you know, that has led to some of the funding among the other things. And, you know, one thing that kind of gets lost, everybody, you know, talks about the contributions or the investment performance. And, you know, one thing too, which, you know, is important, and it's hard to quantify, but it's in there, is that, you know, whenever the plan was redesigned back in, it's probably 2016, you know, the costs of the plans were reduced by roughly, you know, almost 1%. And that percent adds to performance. So if you would have had the same investments over this 5-year timeline and had that higher cost structure in place, instead of experiencing a 10% return, you literally would have experienced, you know, a 9% return. So costs, even though you don't see them in the performance numbers, you know, every quarter, they are a factor, and they do help with the funding performance. You know, on a $10 million portfolio, between the two plans, you know, 1% savings per year is almost $100,000, or it is $100,000. So I just wanted to point that out, that, you know, by taking a hard look at the costs of the plans, doing a comparison versus other authorities out there, and getting the right priced portfolio has made a difference. And that kind of ties into the second bullet point. You know, last year, which was a crazy year, I think everybody on this phone call would agree, you know, with the market being down 30 to 40% in March, and then by October, November, making, you know, all-time, you know, a new high. It was an interesting year. And with all that being said, you know, with the rebalancing and things that were done during that time period, the authority ranked in the top, you know, third of the universe in which they're compared against, which I think is, you know, pretty attractive. All the contributions are up to date. The plans are fully invested across a diversified portfolio. And that last bullet point, I think this came up in the October meeting, is, you know, what percentage of the plan assets are indexed? It's roughly, you know, just shy of about 70% of the plan assets are indexed. So, which, you know, protects you from a fiduciary standpoint. You know, nobody can never argue that, you know, you aren't getting market-like returns. And the other 30% that is not indexed, those are in asset categories like small cap, growth and value, or international, where the studies have shown you can obtain, outperformance over the long run. And just one page, go to page 9, please. And I'll just give you 4 bullet points about the market, just because I can't help myself. So this chart here is an interesting one. Everybody keeps asking us, hey, is the market overvalued? Where are we going from here? And we believe, and our crystal ball is no better than anyone else's, but we believe that the equity markets are going to be supported by, four things in here. The first one, low interest rates that continue to be low. And you can start to see that in the housing market. The housing markets across the country are heating up because cash, continues to be cheap. The second one is the coming out party from the quarantine. I think some of the people were talking about this on the phone call. And that's what this chart speaks of. And this is actually a month old. And this is how the U.S. is doing relative to the rest of the world. And, we are doing, versus the UK, which they're a much smaller country, relative to other developed countries, our vaccine rollout is actually, even though it may not have felt like it over the last, 6-8 months, we are doing a lot better than a lot of other countries out there. And I don't know if anybody saw, but last night, India broke a record. I think they had 300,000 new cases overnight. So it is a real problem still going on in the country. The next thing is the stimulus programs that are supporting this market. Like I said, I think the market's going to go up. I'm not sure it's going up for the right reasons. And real quickly, last March, April, when COVID first hit, we had $2 trillion in stimulus. Before Trump left office, he did another $2 trillion in stimulus. Biden came in, he did another $2 trillion in stimulus, and it looks like we're going to get an infrastructure package here of $2 trillion. So roughly that's $8 trillion. And just to put it in perspective, coming out of 08 and 09, for the 5 or 6 years that followed, in terms of stimulus, we only did $2 trillion over that 5-6 year time period. Right now, we've already got $8 trillion in the pipeline over the last 14 months. So eventually, we got to pay it back. But for right now, the market really is embracing it. And these stimulus packages take anywhere from 12 months to 18 months to really take hold. So the stuff we're feeling now is basically the stimulus package that was passed, last March and April. So that's just my comments about the market. Then page 10, this is the last one. Then you guys can page through the performance where I can answer any questions about it. But this is just a snapshot of the plans, basically since when we took over, just because that's where we have the data. To Peter's point, that 2020 year-end funding status, it's roughly 107% in the union, 101% in the non-union. That assumed actuarial rate return, it was referenced early on at 7.5. The plans have done, 10%. Is that something we expect over the next 6 to 7 years? Who knows? But with interest rates lower, it becomes harder. And then at the bottom there, the 2020, this is what the authority put into the plans. Roughly, 735,000. Most of that comes in the fourth quarter in October. And it was a little tricky for us because it came in literally a week or two before the election. And, so we had to tap dance around getting it in because we didn't know what the election was going to, the potential outcome. It could have been a swing either way. But we got the money in. And if you go to the next page, the performance is really the same. And actually, 3 more, I think it's 2. These are just the annual contributions. Next one. Next one. So this is the union plan. Next one. Yeah. So that top blue line is the performance. This is through March 31st. Year to date, the plan's up 2.9. If we would run these numbers through last night, year to date, it's actually up about 3.4, 3.5%. There's that 5-year number at 10.1. That 1-year number looks kind of crazy. It's not often you see a diversified institutional pension plan do 34%. But just remember, 1 year trailing from March 31st, 12 months back here, we were in the trough of, the quarantine. So that's what that number represents. And like I said, the union, non-union, they're both managed the same way. And yeah, as of right now, everything's, progressing, as what we expect. And one other thing too is that all the fees from the pension program, whether it's actuarial, custodial, legal, they all come from the plan, and these fees are after those fees are, or these performance figures are after those fees are deducted. Does anybody need more information, or?
I've got a question, but
Is that good
before I
for
ask
you?
mine, I wanted to open it up to the committee and any board members in attendance. Any questions for John? Okay, hearing none. John, question I've got, and I'm glad you talked about it a little bit in terms of interest rates where we are currently and the amount of stimulus spending that is coming down the pike and the inflationary pressure that's going to create. Even in a best scenario case, the infrastructure package that President Biden has discussed and put out has the spending happening over 8 years, but the repayment, if that ever happens, over 15 years. Betting line is that doesn't get repaid in my lifetime, let alone my daughter's. So the question is, what, if anything, should we be doing in terms of the plan option, the plans themselves, to take into consideration the, in my opinion, strong likelihood that we are going to have significantly more inflation than we've had for a very, very long period of time. I think people have, a lot of people have forgotten that inflation can happen, and it can be painful when it does. So what, if anything, do you think we ought to be doing to deal with that?
Yeah, so page 8, if we could scroll back to that, actually shows, so remember, inflation in the investing world shows up in 2 places. The first place is in interest rates. So that blue line is a 10-year treasury, and the gray line is the real return in the 10-year treasury, and the difference is inflation. And you can even see that little chart up in the right, and you can kind of see it focus right where it says under March 31st, that the nominal yield, meaning what the 10-year treasury pays, is 1.74. Real yield within it is 0.46, and the embedded inflation is 1.28. And if you look at that chart, like around 78, 79, you know, that 1981, actually, September 30th, there it is right there. I mean, that was Jimmy Carter's years, and that was the oil embargo, and that's, you know, when inflation really spiked. So in a way, if inflation comes back, you know, it might get a little bumpy for bonds in the short run, but that inflation will get picked up in the coupon that those bonds get paid. So there, you know, as that transition, if we do come, and I agree with you, I do think inflation's coming, and quite frankly, I think if the Fed could buy inflation, they would actually buy it, you know, just to help, you know, the savers out there that are all fixed income, because it's, you know, it's really hard for people to make any type of return by just owning fixed income, and you know, some of that money is creeping into the stock market. But anyway, so if inflation does come back, it will be added to the real yield, and it actually, believe it or not, could help us as a group, meaning the authority and as an investment advisor, to help achieve that 7.5% actuarial return. Because if we could get, look at that average in this chart under 1958 to 2001, like the average is 5.9%. If we could get back to a normalized interest rate environment, it would actually help us achieve that actuarial rate of return. The second place that inflation shows up is actually in equities. And inflation starts usually on the commodity sides of things, whether it's oil, copper, lumber, even you can throw the precious metals in there. That's where inflation starts to show. And I'm sure everybody on this call, if you filled up your car lately, you know, oil prices are creeping up, which, you know, is not good for you, but for the oil companies, you know, it's actually, you know, a benefit to them. So not all inflation will cause problems. A lot of companies in the S&P 500 will make more money as inflation creeps in. Who gets hurt? It's the consumer. And because, you know, a gallon of milk, fill up the car, buy a house, those things start becoming more expensive, and people start spending less. And then the economy, you know, can slow down. But historically, the best hedge against inflation has been owning equities. You know, they usually do well in an inflationary environment. With the plan, you know, is there any short-term tactical moves I would make? I wouldn't, because then we get into the market timing game. You know, as the market has appreciated, we have sold equities to bring the plan back to their static allocation. Just like, you know, last year when the market goes down in the plan's underweighted equities, you know, we will buy equities to get to a neutral position. So when the market does recover, you know, the plan will own more equity units on the way up than it did on the way down. But it does feel like inflation's coming, and you know, businesses, you know, should be preparing. And I think the authority, unless you do hedging, you know, and I don't know what your fuel costs are, or if you're involved, but I could see like jet fuel and things like that starting to creep up. You know, that people have to, you know, they haven't had the budget for them historically, which, you know, it could come back pretty quickly.
Yeah, I would just one additional comment. From my perspective, I think inflation's already here, but the Fed is doing a great job burying it in terms of the returns on the long end of the curve. I think the last number I saw was the Fed's buying about $120 billion a month in Treasury securities to keep the long end down. But when I look at things like construction costs, raw material costs, precious metals, et cetera, you've got a lot of inflation in those numbers. I just don't think it's reflected in the official government stats yet. So, and then lastly, I'm a banker, so I deal with people complaining about CD rates pretty much every day. You are right about that. We've made it very difficult for savers to retire because they can't get a return on cash holdings. That puts them in the market, and that creates its own separate set of challenges. So there's a lot that you covered in there. I appreciate that.
Yeah, if you just go back one page, this just puts it in on page 7. This visually just says it all. We can creep back just one. Yeah, so this is scroll up just a little so you can see the time period on the bottom. Yeah, so all this is the yield curve. The purple line is of August 2020. The middle one is March 2021, and the other one is as of December 2013. And, you know, you can see where interest rates, you know, have fluctuated. You know, just look at 10Y. That's the 10-year treasury if you would lend your money to the U.S. government for 10 years. The purple in August of last year, you're getting 0.5% a year for 10 years. You know, it's hard to make, you know, to live retirement on 0.5% on whatever, no matter whatever portfolio size. You know, currently as of March 31st, we're at 1.7, and, you know, as of December 2013, it's 3%. But, you know, to your CD rate comment, look at that front end. You know, if you get a 2-year, 3-year CD, I mean, you're earning less than 1%. You take out inflation, I mean, you're really not improving your purchasing power.
Yeah, I think our CD rate right now for 1-year CD, I think is 30 basis points.
Yeah. So, yeah, I feel bad for the grandma and the savers and everybody that, you know, is trying to live on a fixed income portfolio. It's quite, even though it's been great in the equity market, it's quite tough for the fixed income investor.
Agreed. Okay, any other questions for John? John and Peter, thank you. They were very good presentations. Todd, do we have anything we need to cover in terms of the pension plans before we get to the rest of the agenda?
No, we'll have our formal meeting when we go into a little bit more in depth, and we have, I guess, hopefully by that time nobody else to come in person. But we'll do that when we go over our MMO I think we do that in September. So September, just like we did last year, that seemed to work. So I know we have some of our pension committee. We have Paula, who's our union rep, non-union rep, and I know Danita's on the call. So, and I'm assuming we have one of our union reps on the call as well. But does anybody else have any questions in regards to the pension? Because those are the folks that we're trying to serve.
Yep, absolutely. We want to make sure we take good care of them. That's a commitment we've made as an organization, and we stick to it. Yeah. Any questions? Any final questions? Okay, again, Peter and John, thank you very much. Appreciate your contributions this morning.
Thank you, guys. Any
Great.
questions, feel free to call me directly.
Yep.
Will
All
do.
right.
Thanks, guys.
Thanks, guys.
Appreciate it. Yep.
Thank you.
Okay. Cheers.
Okay, so we will hit the rest of the agenda. I think we're gonna have to move relatively quickly.
Okay, I'll try to move fast. I tried to tell him 5 minutes. I knew that
That,
wasn't
that
gonna
never happens.
Never.
No, agreed.
So,
Okay, so, next, item on the agenda is approval of the meeting minutes from March 25th, 2001, so that, 2021. Sylvette had circulated those a couple of days ago.
Move for approval.
I have a motion, do I have a second?
Second.
Any additions, deletions, or corrections? Hearing none, all those in favor of the subject motion indicate by saying aye.
Aye.
Opposed? Motion carries. Todd, financial statements.
yeah, I'm gonna walk through the financial statements, and again, I'm gonna try to do this quickly. But, we're at the first quarter mark as a benchmark. I thought I'd put up here, where we are as far as landings. So you can see where we are. We budgeted, for the first quarter, 1375, that's combined cargo and passenger. We're up 168. You can see where we were last year in 2001-16. That we're up 12% versus budget, down 27% versus last year. The more important number that we focus on is landed weight, because that's how we get paid. We're up 15% versus budget, and only down 21% versus landed weight. And if you look at most of our landed weight is actually on the cargo side, so it's kind of an interesting split. It's 30% of our landings are cargo, but over 60% of our landed weight is cargo weight. So the bigger planes are cargo. So again, those are the ones that pay the landing fee bills, so to speak. Next slide there. This is our normal passenger update. I thought it was important to kind of point out where we are in relationship to 2017, because as you remember, we did our budget. That was kind of the expense level that we kind of tried to mirror to. So we're down 37% versus 2017. Obviously, we're up versus last year, because last year was when we started the pandemic. So as we were saying earlier, if you look at the month of April, you'll see we had 2,700 passengers.
Todd assures me that is not a typo.
Yeah, that is not a typo. So if we don't have a significant growth in April and May, we're in some significant trouble. But again, our number is that we're trying to get back to from a passenger count is 2017. And you can see that we're actually, even though it's 37% for the quarter, for March, we were only down 20% versus that number. So we're getting there, and you're starting to see the passenger traffic pick back up, which is a good sign. Next slide. First quarter, this is the month. That's not a typo. We had 820,000 in net income for the month of March. Before you get too excited, 650,000 of that was non-operating income. We did do the Rockefeller sale, and about 639,000 was easements, which are considered non-operating, and restricted income. So again, that does fall to that shows as non-operating income, but that did help us out. And you can just kind of see what's going on. You see where we are on some of the things we've been talking about over the last couple of months. Again, we continue to manage expenses, but our parking revenue's down, aviation revenue's up. And the one thing I will talk about quickly is, we budgeted some CARES funding money, and the timing of that is going to change because we got that top-off money at $298, and we're strategically using that. We're still going to use the rest of the money, but the timing will be different on some of the original CARES money because that has a shorter time frame. Next slide. Again, for the first quarter, we are in the black, my favorite color, 150,000, but a big portion of that, again, is that non-operating income. The reason I focus on that non-operating income is because that is non-recurring. And so that's not something we can count on. That was a one-time hit with this Rockefeller sale. But at this point, any money is good money. You see it down there on number 2, 639,000 of non-operating income easements.
Even if you back that out, Todd, we're still $500,000 ahead of the budget.
Yes, we are. And again, we were conservative in our budget assumptions, but you can see, we'll take anything. I like being in the black, and hopefully we'll stay in the black for the rest of the year, but we'll take it month by month. Next slide. And again, I only wanted to point out the top three, as John kind of pointed out. I mean, we have $1.1 million in, budget variance, but those are really top three items, and they're revenue items. Non-operating income, $638,000. Interplane fees, that's going into the plane, that's $204,000. That's revenue, and de-icing revenue because of the winter we had. So that accounted for a significant portion of revenue. If you look down there, that offset some of the challenges we had in parking and even some of the deferring of our CARES Act reimbursement, because we anticipated using more CARES for the first quarter, and we haven't. So those two, have kind of offset. So if you did the full list, and we were originally going to do the full list, it was a lot of, 50,000 here, 50,000 here, but you can kind of get the gist of we need revenue, and we can't really cut expenses any more than we've already done. Next slide. Top cost centers. Again, my favorite, parking is slowly moving up to its rightful place as number one. Hopefully it'll be back there at some point. But, aviation services, parking, aviation lease, those are our ticket items. And you can see there, 507,000 of operating losses offset by that 657 of non-operating income. Next slide. This is our cash flow. Again, just kind of updating that and where we are. Again, the most important thing to keep in mind is we are going to be above 60 days cash on hand after reserves and everything through the rest of this year. I only show 6 months out here at a time, simply because you run out of space and it gets really tiny. Next slide. You can see the things that are changing probably the most are those things in yellow or capital, because it's just the timing of those. Those are really the things that change significantly from month to month. And if it changes 50,000, I'll still change it to yellow. You can see the CARES money. That's different timing than we had on budgeting, but you can see that 457, 300, and then that's kind of our timing now on where we are with the CARES. We're still going to use all the CARES, but the timing will be different. You see at the bottom there, we're at the end of April, we expect to be about 226. I think we're at 211 at the end of March. So again, we're staying above that. Now, I didn't show it earlier, but we did not, this does not include any financing, which we'll talk about in the discussion items later. But again, we are hanging in there. I think that's it. Next slide, I think that's it, yeah. So at that point, anybody have any questions?
Any questions for Todd? Entertain a motion to accept the finance report.
So moved.
Have a motion, second? Have a second? Any additional questions or discussion? Hearing none, all those in favor of the subject motion indicate by saying aye.
Aye. Aye.
Opposed? Motion carries. Okay, Todd, let's go to the 2021 operating budget revisions.
Yeah, so, and so that put up what I put into Novus there. But you remember, if you look at that fifth bullet there under considerations, our exciting, robust budget had a whopping net income of $67,679. I don't want to round it up to 68 because a couple hundred could really throw us off. But it was challenged, and a lot of things we did as far as reducing expenses were necessary to balance this budget, and we are managing. So we received this additional top-off money, this $298,000, that was unbudgeted. So what we want to do is kind of flow that into the expenses because we have some challenges there, as well as reducing our bad debt from 250 down to 50. If you remember, this latest CARES support has money in there for concessionaires and vendors. So we don't need as much in there as we originally budgeted. If you see in our variances, that's one of the big variances that we've had. So what we're saying is, hey, look, we want to spend the 298 and use 200 of that. So that's approximately 498. We're going to use half of that on employee compensation. That would be benefits, salaries, and all the good stuff. And then the other half for things like windows upgrades, professional fees, all the things that we're starting to see now that we need to do and just kind of reshuffle them. If you remember, we had a horrible winter, so we need some money in materials and supplies. There's just a lot of needs, and this is just our way of just saying, hey, it doesn't affect the net. It's just some reshuffling of some of the budget lines so that we can balance out still at the 68,000. Even though we're ahead of that, I'm not ready to spend that money yet either. The surplus that we have so far. So all we're really saying in recap is 298,000 of CARES money. We're saying let's roll that into our 2021 budget and reduce our bad debt from 250 for the year down to 50, and that money will be merged into other lines that will net out to the same net income of 67,000 and change.
I'll open it up for questions. I'll start. Where are we in terms of unfilled positions and the 250 that's there? Are we looking at hiring positions we've been holding off on hiring that we didn't have budgetary funds for? Are we looking at salary increases? What's the game plan there?
Yeah, so I think, and we'll hit on some of this as well in exec committee. Part of our challenge right now is filling open positions.
Oh, yeah.
And so,
That's everybody's problem
as
right now.
As Todd alluded to, we have a number of categories and lines that were pretty lean going into the budget, and one of those was advertising. So from an advertising perspective, doing a lot more marketing and outreach to get positions filled. We're trying to do a lot on that side. In terms of open positions, we do have a couple of open positions that this will enable us to go back and get filled, or at least post to try to get filled based on number of applicants. But that's really what we're trying to accomplish here. Is we've really pushing a lot of this, as Todd mentioned. We really ran through our budget on the snow removal side. Currently, because of staffing levels, we're also experiencing higher levels of overtime because we don't have the people that we're able to put in these positions, and that also gets expensive. So we're really trying to get the positions filled. So we're working on a number of fronts to do that, but we definitely need to put this money back in that we can try to get that accomplished.
Okay.
And John, to your point, this is the first quarter. We're going to do these quarterly, but my guess is don't be surprised if we come back to at the end of the second quarter with some reshuffling as well, because this is a challenging year, and we just want to keep the board up to date of what we're doing. Because again, we're in survival mode. We're doing everything we can, and you've heard me say it earlier. We can't cut expenses anymore. Every day I have somebody saying, "I need this, I need this, I need this." And I'm like, I get it. We got to make sure we got the revenue. So we've got some additional CARES funding coming in, some of that. We had our call with the airlines. They certainly said, spend it now. So again, we're just trying to make sure that this bridge of funding that we got holds us over until we get back to being self-sustaining.
Right.
And that's really what we're trying to do here. So,
yeah.
Okay.
Now, in that terms of the personnel side, Uline's paying $23 an hour for warehouse. They're not doing that because they're nice people. They're doing that because they have to.
Right.
Yeah.
FedEx, I think, is 21, if I remember correctly. Amazon's paying a $3,000 sign-on bonus. WestBet's $2,500 sign-on bonus.
So
we've got a lot going on in that regard. So
there's a lot of competition clearly, and that's across the board. So we're in the same situation as everyone else, but we've got to do some things to really try to get positions filled, and that's really critical for us right now as we move into a very busy, at least it looks that way for the summer schedule. So.
Yeah, and with the federal unemployment benefits, they don't run out until September.
Yeah.
If they run out.
If they run out.
Yeah, so you've got this issue at least the remainder of 2021.
So again, we might come back at the end of the second quarter, but we want to keep you updated. It doesn't change the net, which is important. But again, we do want to make sure that we are good stewards and addressing needs as they come up.
Yep. And then
Tom, these positions that are open, are these customer service positions or are they professional skills?
How about all of the above?
All of the above, mostly, Larry, but a lot of the frontline positions actually, and that's really the critical path for us right now.
Okay.
Then in terms of the other expenses, what are the top 2, top 3 that you see in that category?
I mean, one of those is clearly legal.
Oh, yeah.
And we can obviously talk through that. I think Todd talked about some of the professional services. I know we have a number of software licensing and other things that, just requiring upgrades and things that we've been trying to hold. But at this point, we've got to move these things forward. And I know even on a project perspective,
We've also had some incidentals. When you have short staffing, you have more incidents of minor incidents that you have to pay for and those kind of things. So it's a full gamut of things that we're using for. I mean, I wouldn't even go, I know Tom talked about one or two legal here and there, but it's across the board. I mean, most of these lines are tight.
Oh, yeah.
Okay, any additional questions? If not, I'd entertain a motion to approve the operating budget revisions.
So moved.
I have a motion. Do I have a second?
Second.
Okay, I have a second. Last call for any questions or comments? Hearing none, all those in favor of the subject motion indicate by saying aye.
Aye.
Opposed? Motion carries. Okay, update to Exhibit B for the airline rates and charges.
Yeah, you remember, I'm trying to remember when that was. It seems like, was that February?
Right.
February, we came with the rates and charges, and this is just adding in the Wiley space, which was left out of the document, so we wanted to include that. There was some confusion that this wasn't out on the document, so that's what's highlighted there. It is consistent with some of our blended and all the other things we have there. It's just something we wanted to put in there for clarification. So that's the only thing that's highlighted. Everything else is exactly the same. We just added in the Wiley terminal space charge.
Okay, sounds good. Any questions? Entertain a motion to
Do
approve?
we need to take any action on that?
Yeah, you have to approve it.
Yeah, we have to approve it.
Okay. I'll make that motion.
Sounds like a motion and a second. Any additional questions? Hearing none, all those in favor of the subject motion indicate by saying aye.
Aye.
Opposed? Motion carries. Okay, into the audit update and financing update. Question, the audit update, I assume we talked publicly. Should the financing update be an exec session?
That's more of a judge question, I guess.
Judge, are you on?
Yes, I'm here. This is a financing update, is that it? And
Well, that's when we get to the finance. We'll do the audit update first. That's a public session item. The
right.
question is whether the finance update should be public session or exec session.
Well, is this just going to be to provide information, or are decisions going to be called for?
It's just information.
If it's purely to provide information, that can be done in executive session.
Okay.
Okay, sounds good. So let's do the audit update, then we'll go to exec
Okay.
session.
So I just wanted to give everybody an update. Karen, raise your hand over there, like you haven't seen Karen, has done a great job of kind of moving things along. I'm the slowpoke that's kind of got a few things that I have to finish up on, but we are still on schedule to bring our audit to the committee next month. You should be getting a draft at least a week or so before our meeting, so you can take a look at it. I don't think there's any significant things that you should be concerned about. I mean, as they pointed out to us, we were the first organization that they did virtual last year on the audit, so we are getting our second chance at it. So we were the first one last year, and now we're doing it all over again. So again, we're on course. We were planning on bringing that to you next month. And that has to be completed by June 30th, but we always try to bring in a month early in case there's some challenges or whatever. So we're still on course for that date. So with that, I don't know if anybody has any questions.
Any questions for Todd on the audit? Okay, hearing none, I'll entertain a motion to go into executive session.
So moved.
Do I have a second?
Second.
All in favor?
Aye.
Next session, please.
You're on mute.
You're on mute, Judge.
There we go. Okay. The discussion was to provide general information regarding the financing update, and primarily a description of the program going forward, dates for various meetings, and so forth. There was no deliberation. There was no discussion of any issues. It was purely an information session.
And we did want to make a note that the notice of a TEFRA notice, public notice will be on the website, LNA's website, tomorrow, the 23rd.
Okay, sounds good. Okay, open up the floor for any new or old business. Anyone have anything they'd like to bring forward to the committee? Hearing none, I'd entertain a motion to adjourn.
So moved.
Okay, we are adjourned. Thank you, everybody. Matt, how much time do you think?
It's up to, you guys need 2 minutes?
2 minutes.
Yeah.
That's gonna be carrying that kid for a long time.
His dad. You can do it.
Good morning, everybody. Welcome to our April Business Committee agenda. Unfortunately, Mike will not be able to join us today, so I'm going to step in and share. Thank you all for coming. Sylvette, would you please perform a quick roll call?
Sure thing. Brian Games,
Here.
Jeff Matskin,
Here.
Mike Stershik,
Here.
Chris Worley, and Terrence Rinsky. Here. You have a quorum.
Excellent. Is there any public comment for this committee?
We do not have anything, sir.
Okay. Then we're going to move on to action items. We have a few quick ones here. First, I trust you all had an opportunity to look at the meeting minutes in Novus. I would ask for a motion to approve those meeting minutes as presented.
So moved.
I'll give it to Jeff and second to Tara. And all in favor of approving the minutes as presented, please say aye.
Aye.
Any opposed? Very good, minutes are approved. Next, we have a couple of items related to ongoing maintenance. Who's going to describe this for us?
Ryan, I'll take the first one on the paving.
Thank you, Ryan.
Thank you, Matt. Good morning, everybody. So I can run through this pretty quickly, but basically what we're looking to do is, as some of you may recall, back in 2017, we had 3 basically on-call paving contractors that we had under contract to do various landside paving for roadway improvements, emergency repairs, those kind of things. So it actually worked out very well for us from a budgeting perspective, time, efficiency, streamlining the procurement process. So we look to do the same thing this year with both landside and airside. So roadway work as well as apron taxiways, those kind of projects that can come up on the airfield that have different specifications from the PennDOT mix, PennDOT road mix versus the FAA criteria. So the contracts we're looking to enter into are for 3-year terms, 2 1-year potential extensions. Overall budget of $6 million. The last contract was a budget of about 6.5. Of that, we spent 3.2 million, which I think Todd's probably going to be happy about. With this, we split it up again to give us the flexibility: 3 million for landside, 3 million for airside. But really, if you scroll down a little bit, so what we did, similar to the last one, is we had 2, we call them sample bid tasks that we get the pricing on to set the. Right there, you can set the order of the award from those different tasks. So we did receive on April 16th, we received 2 bids for each airside and landside from the 2 same contractors. So the way it works is Lehigh Valley Site was one who was also, both contractors were part of the 2017 on-call paving as well. So we've had good relationships with them. And Barker & Barker's doing, obviously, work with us now at the parking lot. So 2 contractors. The land side task was paving some of the Terminal Road out front here. In terms of the land side, Lehigh Valley Site was lower at $468,000, which is 12% below the engineer's estimate. What that means, and you'll see kind of the percentages, is of that $3 million, Lehigh Valley Site gets 40% of that amount. Barker & Barker, who was the second lowest, gets 30%, and then we have a discretionary 30% depending on timing with the project, some of the need that we can allocate as needed. So that's really how the breakdown works for landside. Airside, the sample task was repairing part of the apron out near Gate 2, and it was actually reversed. Barker & Barker was lower on airside. Lehigh Valley Site was right behind them on that as well. So same 2 contractors, just different components of the airside and landside. But basically, just to kind of wrap it up, what we do on future tasks going forward is, 1, they have to be in our capital budget, just like those 2 sample tasks are, in the cash flow in terms of what needs to be done. But then the way it works is those percentages are given to the first tier contractor, if the price they provide is within 10% of the engineer's estimate, then it's considered responsive. If not, we can go to the second one that we're under contract with to get that value as well. So again, it streamlines the procurement process. It has qualified contractors that understand our rules and regulations, are badged, all those components. It makes it easier to get emergency repairs done, which I think we did a couple years ago with the multimodal lot, had them available for that. So it definitely helps us in a lot of situations and gives us some flexibility. So with all that, we're looking to award 2 contracts, one with Lehigh Valley Site Contractors from Skippack, Pennsylvania, and then Barker & Barker Industries from Bethlehem, Pennsylvania. Minimum period of 3 years in that not to exceed amount of $6 million for those 2. So any questions on that?
Were these the only respondents to our solicitation?
Yep, yeah, just the 2. Yeah, and last year I believe we had 4, or not last year, in 2017 we had 4, of which we selected 3. But of the 3 we had the last round, these 2 were the best of the 3 anyways. So I think it was all the pricing that we got, the award letters are in there, were very comparable, and all the forms they submitted were all up to snuff.
We don't have an RCO, do we? As a responsible contractor.
Ordinance.
I don't believe so.
So we don't necessarily, these were just the 2 bidders, but we don't necessarily have to take the lowest bid. We just have to figure out which one we want.
As long as for this, as long as the low bidder meets all the specifications and questions and qualifications.
I think the phrase we've used is lowest responsible. So it gives us a little bit of flexibility in that regard.
But you haven't
so that we don't.
You haven't defined responsible
Right.
as anything having a certain class of, like Northampton, Lehigh County have RCOs where they
Yep.
define, like you have to be class A or the equivalent of,
Right.
but you don't have that.
No, not specifically. We vary it depending on the project with some of the FAA criteria of, having worked at an airfield over the last 5 years, some of those components.
And you still only had 2 bidders.
For this, yeah.
Wow.
They're so busy right now, Tara. It is.
Is that what it
amazing.
is?
Yes. Yeah, contractors are now really spooling up.
Yeah, and if you notice, both of them were below the engineer's estimate, which we were very surprised to see, given that point, how busy they are. But I think just because it's a multi-year contract, that each task, it's not like they're locking in their prices for 3 years. Each task is based on what the work is. So
And each will have its own funding stream for that project.
correct.
And that discretionary fund, that's allocated, so if the price fluctuates over the 3 years, or?
It's really just depending on the contractor's availability and/or if we prefer to use one versus another for a type of task. We
So
can
it's
just
just
allocate it.
And that'll go back into what fund if, it just goes back into the budget?
If we don't use it, we only pay for what we're using based on the budget. So it just gives us that flexibility. That's probably.
And one of the things we wanted to be careful of was we don't want to have a structure that would force us, for example, to use a certain contractor who shall remain nameless.
Yeah, Pizzagate, I got you.
Yep.
We have no idea what you're talking about.
But I could go for a large pepperoni.
Was that what is on that? I thought I saw green pepper. If there are no other comments or questions for Ryan, I would ask for a motion to award the bids as presented to each of the separate contractors.
I'll make a motion.
Thank you, Tara. I'll give you the second on this one, Jeff. First to Tara. Wonderful. All in favor of awarding bids to Lehigh Valley Paving and to Barker & Barker as described by Ryan, please say aye.
Aye.
Aye. Any opposed? Okay, the bids are awarded. Who's going to talk us through the
Steve will take this
elevator
next
action?
on the elevator escalator.
Right in my wheelhouse. So this is really what I've come to the board for, to the committees, to actually reject the bids that we received through the RFP process and then kind of approve a route through cooperative purchasing. So as we normally do here, every couple of 2, 3, 4 years, we put out an RFP for our elevator maintenance contracting, including all labor, equipment, material, and services to provide that preventive maintenance to our automotive machinery, elevators and escalators. This year, we put this out in mid-March on PennBid. We did have 8 responders through PennBid. We thought that was a pretty good representation of these elevator escalator service companies. 3 companies did participate in our mandatory pre-proposal meeting in on March 23rd. And then we had 2 companies submit proposals, and you can see it was our current incumbent Schindler Elevator Corp. For a 2-year contract. That was what the bid was for 2 years with 1-year extensions. So Schindler's 2-year maintenance proposal was $344,000. Triad Lifts was $646,000 and change for just 2 years. Just to compare what we're paying now, our final year, which is that second extension with Schindler, was $84,912 for the year. So what we're recommending and what we'd like to do is we'd like the board to reject these proposals from Schindler and Triad and allow staff to continue to negotiate a 2-year maintenance agreement through our cooperative purchasing company. This is through Sourcewell, but this is also PA Co-Stars potentially, but we're actually talking to several of these escalator elevator maintenance companies through cooperative purchasing. And, for the 2 years, I'd like not to exceed $240,000. So you can see by going through the cooperative purchasing compared to what we're actually getting through our bid.
What accounts for a doubling of the cost? Is the Schindler that busy?
Well, we're not too sure. I mean, it could be some of our being a little bit more cognizant of what they're doing when they're here. So putting, kind of putting a lot more emphasis on what they're due as part of their contract. If you notice, this down escalator is down today. Their contract ends the end of April, their maintenance contract. They're actually putting in the step chains as part of their maintenance agreement. So we've been really keeping a very close eye on what they're doing. And I think over the years, they've come to see that what this proposal was 4 years ago was nowhere near what work we're actually going to monitor and require of them as part of this.
We had also, but going into that, if I remember correctly, we had deferred maintenance on our elevators and escalators for so long, the cost was going to be significant. We have subsequently, over this 4-year period, done what I would estimate to be a fairly good job of maintenance, which should reduce the future cost. And I assume that's why you're shooting for $120,000. Is Schindler just like, I never want to come to the Lehigh Valley again?
Well, Schindler is one of the, this is kind of taking 2 tracks. We put out the RFP, but the escalator companies have said, why don't you go through this cooperative purchasing because it's less expensive. It's a defined maintenance rate, maintenance program. All that stuff is kind of pre-negotiated to come to this Sourcewell. And I don't know, why, I can't speak for Schindler as to why they can come in through Sourcewell $100,000 less for a 2-year contract through Sourcewell rather than through the bid process.
Does the pre-negotiated portions or maintenance exclude certain things that we might need that actually will cost extra then?
No, and actually that's part of what our negotiation through Sourcewell is getting our maintenance requirements within the Sourcewell contract. So it really gives us the opportunity to negotiate the price. We've gone to these folks through Sourcewell and said, hey, you know what, you're both pretty close, sharpen your pencils some more, which we can't do during, it's not, we don't have that ability during the bid process. So we're, it's more that, as we've talked about before, being a private business or company, you can go to suppliers and say, hey, give me your best price. Hey, they said that was your best price. What are you going to do to cover it? So that's kind of where we are through the cooperative purchasing program. It allows us to, they have their defined prices, but then we can, within one of the companies has different levels. They have, if you have 100 machines in your building, you get the platinum level. So that's this rate. this maintenance rate, this kind of, if you only have 10, you're down in like the silver standard, so you're gonna be paying this rate. So we can,
Would that delay any sort of maintenance? Like, would you, because you're sourced with all these other companies now, would they say, oh, I'm sorry, you have like the bronze level, and so you're gonna wait a couple months before we get to service?
oh, no, within the response requirements that we have within our bid packet will be incorporated, within our bid spec, will be incorporated into the cooperative purchasing agreement.
Is this giving Colin night sweats? Because we did have, this is our social media fun with escalators at LVIA in the past, was something that we've gotten beyond.
Well, and I think to your point, Matt, we've done a lot of work on the escalator, elevator equipment over the last couple of years. So we're just looking to continue that. Again, we're still under contract till the end of the month, but we'd like to get the new contract buttoned up through Sourcewell and get moving into May.
So in this rejection, we're authorizing you to
Move forward with negotiate
Sourcewell.
with the cooperative purchasing agreements with the vendors.
But you won't bring another, will you bring an agreement in front of us again, or this authorizing you to execute your discretion?
At this point, we would just ask for approval not to exceed the 240, Mr. Chair, because essentially we have money in the budget for this year for 1 year of the agreement. It's really the second year that we don't have any budget authorization on, so.
Gotcha.
Are there any downsides to this?
We could save money.
That's not a downside.
I know.
It just
that's what
seems
Todd
like
always
almost too
reminds
good
me.
to be true.
Well, we really do try to work through the bid process historically. I think that's been been our preferred process. But what we're finding is that a lot of companies are moving to cooperative purchasing because there's a cost for the individual companies to go out and find bids, find which company's bidding, make sure they submit a bid, provide all of the documentation. There's an internal resource cost for companies submitting a ton of individual bids to gain work. If they can get people to move over to a cooperative purchasing, then they can sit down and put in one bid through a cooperative purchasing agent and work through that negotiation process. It's so much more efficient for them. And on the back end, it's efficient for us. And if we can incorporate all of what Steve talks about in terms of our bid requirements and maintenance requirements in those documents, it's a win-win. And it saves money for them in terms of having to go through a particular process.
If I may, Tom, I think the thing that Tom said that you really got to pick up on is it's a negotiation process when you go through the source, as opposed to the bidding process, which is pretty much, that's it.
Lowest bidder.
So we can go back and forth and negotiate where we can't do this in this process.
Well, and then just.
And there are more people to choose from too then?
Well, and that's a great question, because in order to gut check what we're doing, the reason we went through the RFP process is because of the eight companies that saw this off of PennBid. We got it out and about. We can kind of gut check what the other organizations were telling us through the cooperative purchasing, because not all 8 individual companies that are on PennBid are able to download our bid spec or cooperative purchasing. It does narrow the number of maintenance responders, but they're big name. Our incumbent is one of them. And Tyson Krupp is the other one. So they're big
Contractors.
They're contractors within the world.
So are there any other questions or comments for Steve?
I did want to point out, this is consistent with what we talked about in the last meeting with these budget revisions, because if you look at that number up there that he had for that ends in April, that was 77,000. So that's an increase in our budget number, because we assumed, I know we did not assume more than 240.
We assumed 2,500.
That's what I'm saying. So that's another one, that's under the contract services. So these are all the things, that's why I said when John asked the question, there's a lot of things, because everybody's costs are going up, and we're trying to adjust accordingly. So I just wanted to point that out, because everything seems to kind of follow suit.
Well, thankfully we have the backstop for it.
Right.
I just wanted to work.
Thanks, Tara. Larry, do you have a?
Yeah, I just had a comment. This co-op purchasing isn't something new to the airport, correct? We bought vehicles and snow equipment and all kinds of things through the same process.
That's correct.
That's correct.
Yes.
as a matter of fact, over time, there's been a few different cooperative purchasing agencies added to the list in terms of that we're qualified as an authority to use. So it's growing.
Thank you, Tom. Thank you, Larry. I'd ask for a motion, I guess, to reject bids, which sounds weird, but and approve staff to negotiate through Sourcewell on a contract not to exceed $240,000 for 2 years. Thank you, Tara. I'll give Tara the motion, and I'll give Brian the second on that one. Okay, all in favor of approving the rejection of bids, please say aye.
Aye.
Any opposed? Okay, bids are rejected. Thank you, everybody. That concludes the action items. We have a brief capital projects update from Ryan. And then we're going to get an air service update through Darren, I believe.
Hi, thank you, Mr. Chair. Yeah, I can go through these pretty quickly. Not much has changed from the last update. Big pieces are with the runway project, I think I mentioned before, including the taxiway echo demolition. They've actually milled out all of the pavement. You can see the photos and working on some of the grading and site work for next month. Again, the other package 2 project resumed in March. The Alpha and Echo lighting upgrades are done. The only thing remaining is the remaining taxiway Alpha final paving, which we're coordinating with our cargo carriers, because that's the only way in and out of the cargo apron. Package 3, currently working on setting up the schedules and some of the long lead items, but what they're doing now is some nightly electrical preparation survey within the intersection. And then obviously pushing towards those 2 scheduled airfield closures in September, continuing to have our monthly airline coordination meetings and working with the carriers on the windows as we continue to move forward. The one thing to note with this is the latest graphic, again, kind of some of the items I mentioned. But the one thing to note is we are working on the package 4 grant application that's due May 3rd. So you can kind of see on here, as of later in the year, we'll have 4 packages ongoing, as I think we mentioned last month. Again, package 1, package 2 are going to be really winding down. 3 and 4 are going to be ramping up. So working with that, working with the FAA to take advantage of all of the grant funding we do have, make sure we're not leaving any on the table for work that they would include as we've been going through. Probably the biggest project we're working on now in terms of getting things wrapped up is the parking lot rehabilitation project. Break it out into phases just for the ease of discussion, but phase 2, which is what they're working on now, is scheduled for completion by the end of this month. Really what that means is reopening short-term, activating the new parking access and revenue control equipment, which is long overdue, and then when that is complete, kind of starting phase 3, which is switching to the 1 entrance lane that's currently open with the old equipment and the 2 exit lanes at the booth with the old equipment. So I know, coordinating a lot internally with Glenn from IT, Todd, parking, just getting all that squared away so we can, obviously open the lot with the new system and coordinating with that. And obviously getting the word out, just since for about a month we'll be using the new system, but people that are in the lot with the old tickets obviously have to process that as well. So a lot of coordination there, but that's probably the biggest thing. For those of you here, you can kind of see some of the work being done.
How many EVs do you have?
There's 10, 5 units, but 10 spots.
10 spots, 5 units. Is there room for potential expansion in the future, or is that?
In the future, yeah, we'd have to, probably do some electrical upgrades. We did expand it from our original design based on some discussions we've had and with the lead components with the terminal connector components. But
because that's a big discussion now, because there's so many more EVs in the cars in the valley now. It's going to be a problem with people trying to charge their cars soon. Not right now. But
Not if forward-thinking organizations like ours continue to invest in infrastructure to accommodate it.
We're forward-thinking enough that we're putting EV parking only in there so we can ticket guys with.
Exactly.
Who pays for the power? I pull in with my Tesla and plug it in. airport pay for the power?
So we do, but up to a certain time limit. I think it's like $1 a day or something. It's not much.
Okay.
Through the,
It's an amenity.
yeah.
So do you,
It's not a big funding. It's
So I wouldn't drive over here with my
You're
Hummer
banned
electric
from,
and-
yeah, you're years away from parking in the EV spots.
but you pay for the parking, right?
Yes.
You're paying for parking, and then is there a premium that is added for EV, or you're saying that's an amenity? So regardless of whether you have an EV or any other kind of car, you pay the same price?
That is correct right now.
Wow.
Right?
That is correct right now.
Talk about
Fast
forward.
charging.
And we looked at this, so most airports, that's the way they do it, because they're already getting charged for parking.
Yeah.
Well, and the other reason was there's only a few vendors that process that, and it's a little challenging.
This is your Earth
From
Day
a fee
story.
schedule.
Yeah.
This is Colin's Earth Day story.
The Earth Day story. That's
It's
awesome.
a great one.
I'm
It's
so
perfect.
excited
We're all
about
talking
that.
about it,
So yes, we're definitely excited about that as well. So good feedback. Again, kind of just working on the background planning for this, when we're going to reinitiate construction. Again, working on some of the long lead items to continue moving that forward. But at this point, hoping to restart in May, dependent on some of the equipment that's coming in. Just a brief update on kind of the non-LNA funded projects. Our exciting entrance road relocation project that's obviously a pain to deal with, but the main water line that serves the airport's been relocated, working through UGI relocation, some of those components, but we're really, again, just coordinating with the contractor on minimizing interruptions for access and obviously any safety concerns. Some quick updates here for Queen City. Nothing new on the ALP update. We should be hearing anything any day according to the FAA from the approval process, so we can hopefully wrap that up and get everything out there for review. Construction removal had some good work being done here. Most of the, about 90% of the tree removal and grubbing is completed within all of the property areas. City of Allentown coordinating with the police department, Mack trucks, and some individual property owners. I'm actually working on some of the replantings now with the homeowners, and then coordinating with the City of Allentown and Mack trucks on those components as well. So actually, Beagley tree has actually been working really well on the project, very quickly, effective, and obviously taking care with property owners, obviously on our behalf. So a lot of good movement there. Not much update here, still working through the design over the next month or two as we progress. There'll be some more updates on what we're looking at, but again, no real change from before. I mentioned the runway width being confirmed by the FAA. Brighton Air Park, biggest thing here is the building has been fabricated and it's in the Vanguard's warehouse. We're coordinating on site work for spring, trying to narrow down the date based on the, have a call with them tomorrow, confirming the cost for the site work and the timing and getting everything scheduled. We have, we're basically starting the process of applying for the building construction permits with the township. So moving that forward, hopefully I think the next GA update is in June. We'll have some more information for that, or some more detailed discussion as we move forward. And then just as we've done before, kind of the overall summary slide, the only thing that's really changed from last month is really the expenditures to date of what we spent, keeping things moving. As Todd mentioned, with the cash flow, obviously monitoring our reimbursements with our spend. So keeping pace with those, and the FAA giving us our reimbursements as needed. But I believe you had nothing else on there. I believe that was the last slide. If anyone has any questions.
Any questions for Ryan on capital projects updates?
Just one quick comment, Matt.
Go for it, Brian.
Just a quick update, just boots on the ground kind of update from when I was in Braden the other day. There were so many planes on the ramp that some friends of mine who were flying their small plane in, there was no room for them, which was a good thing. It was packed. And while we were there, a helicopter came in to fuel. Anyway, it was very busy. I got talking to the mechanic out there. He says he's got 8 airplanes waiting to come in to his maintenance facility for annuals, and it's just a matter of space and time to be able to work on them all. So I guess just a quick update is that activity is as busy as I've ever seen it out there in the last probably 4 years or so.
Time to build
In
hangars.
case you can't see, Todd's checking his numbers. He wants to revise his projections based on this information in the field.
Brian, it's time to build hangars.
I would love to see us do something with those T hangers. I know Ryan has applied for grants for that. Some of those are in pretty rough shape as far as metal falling down. But as far as activity goes, was a lot of activity out there. So just a little perspective for this committee.
Thank you, sir. We'll put that in a note for the upcoming GA update in June. And just the last comment I'd make, I've noticed the quality of the photos in the capital projects updates is really. Did we invest in a nice camera or a photographer who's?
No, it's just our, maybe he's got a new iPhone, I
We look good. Yeah. Much better than they used to. Thank you, Ryan.
Ted Rosenberger's shooting everything now.
All right, Darren, take it away.
All right, so just go through some things just sort of on the overall industry level. Things still, recovery may be starting, but it's certainly not good yet. The airlines are still losing a lot of money. Air cargo demand, very high. We obviously saw that here in 2020 as well. Revenues way down still for the passenger airlines. Good thing is bookings are starting to improve. You're starting to see that. Bad thing is, it's a lot of leisure travel, which is kind of good for us, but overall business travel pays the bills for these folks. That's the the higher dollar travel typically, and that's going to take a while. We all know that. Cash burn, they're still going to be burning cash probably throughout 2021 the way it looks, and they have accumulated a lot of debt in the last year. A lot of these airlines were close to debt free going into this. It's going to be a while before we see those days again. So. And you may have seen this slide once or a dozen times. I think we've used the same one as it, as it's been updated, but just sort of the optimistic and pessimistic outlook for recovery. I kind of feel like ABE is probably going to be more on that optimistic line. I think we're maybe even a little better than that optimistic line at the end of the day from what we're seeing now, but that still remains to be seen. But we're trending in the right direction, I think. So this one I thought was interesting too. You see capacity against basically paid travel or paid ticketing. If you go back to the beginning back there on that January of 20, and those lines were basically, conjoined to some end, that was, we used to talk a lot about capacity discipline, and you remember when you got on an airplane, there was never an empty seat or rarely an empty seat, and that's why, That's not the case today. We've seen the dark days of aviation, at least my aviation career there, around that April timeline, when we talked about, 2,700 passengers through this airport in a month. Crazy. Good thing is both lines are trending up. You are seeing airlines have added back quite a bit of capacity over the last 8 months or so, 10 months. And, starting to see traffic get there as well. That's the big thing. As those lines come together, that trend will continue to go up. So our route map has not changed much, which is great. This certainly wasn't the case, over the last year, but we're pretty much back to where we were pre-COVID. We've got all our destinations back, other than Philly, which we lost, but we added Dulles, so no net change there. Honestly, I would say to some end.
Any talk about Philly or no?
I don't think we will ever see Philly again. I mean,
Really?
I would be incredibly surprised. I thought we would have lost Philly 3 years ago, to be totally honest. It was just too close. Yeah.
Huh.
So, I mean, who knows? I could be wrong, but I'll be very surprised if we see it again.
Have other,
I live in western Lehigh County, and it takes me an hour to get to Philly, and it takes me half an hour to get here.
Yeah.
And Philly doesn't suck like it did 10 or 15 years ago.
but it's still way worse than here.
Oh, it's absolutely way worse than
The experience out here is definitely much better.
Yeah.
But it's hard if you're going to connect. If you're going to go to Philly, it's hard to convince someone to connect through here to go to Philly. It just doesn't. It's a tough sell.
Do have other airports seen significant drops in their route maps?
Yeah, I mean for sure. Some of the locals, especially
Particularly competitors like Scranton.
Wilkes-Barre, and yeah, I mean they've seen Delta is no longer there.
Period.
At all.
Ever coming back?
I mean,
hard to say.
They took everything with them when they left. Let's put it that way. So I would think maybe at some point they come back, but it's probably going to be a ways. So yeah, we're pretty fortunate to have all these destinations back at this point in time. And you'll see sort of we show where our capacity is compared to everyone else too. So just looking, this has kind of been a theme throughout. The Northeast really has taken the biggest hit in capacity from the airlines. I think, kind of obvious reasons. Caseloads have not been great in the Northeast, and travel restrictions have been more stringent. So, see Pennsylvania down there with that number 5, number 6, I guess it is. We're down 43% capacity year over year, May 21 from May 19. So,
Aaron, with the bottom, with Newark, with Reagan, and with the New York airports, how much of that is foreign traffic disappearing as well?
That's where you'll see the hubs are going to be way farther down than everybody else because the international traffic is still almost non-existent, very, very much reduced from what it was.
And remind us of our capacity number.
43%.
Not for Pennsylvania, but for ABE.
We're getting there.
Yes. So there we go. So here's us. Here's the airline's capacity across. I showed April and May 2021 compared with 2019. So you can see a couple of trends here, I think, and answer your question, you see where Philly is way down there, and that, again, I think that's going to be a lot. Pitt, even some of that is. Wilkes-Barre, like we said, Wilkes-Barre's just gotten hit very hard with this. That's why you're seeing how much capacity they've lost. You see most showing improvement into May. I think the only one that's not there is Asheville. The last 2 airports I threw in, obviously everything else are local Pennsylvania airports, and the last 2 are Allegiant bases that are comparable. I wanted to throw those in there just because they also have crew bases. So that's Grand Rapids and Asheville. But the great thing that I see on this is there's only one airport here that is actually going to have more capacity in May of 2021 than we had in 2019, and we are 5% up, which is phenomenal. I mean, that is, again, Allegiant crew base. Thankfully, we got that in here when we did. That makes all the difference in the world. But we are seeing capacity increases on others as well, which you'll see right here. You can see where we see some capacity increases. Even our Charlotte service, we're seeing some increases. Obviously, Philly, you see there's 100% down. That's gone. But seeing the increases on the Delta, Atlanta, Detroit, it's fantastic that we're seeing them. Now, that being said, what we have to do now is start filling those seats. These are not traffic increases, this is capacity. So if we're going to continue to get capacity, we've now got to put, as I like to keep saying, we've got to put butts in seats if we're going to get more seats. So, but like I said, the story's good at this point in time. I would have never guessed we would hit 2019 capacity numbers maybe this year, to be honest with you. And we may go back below it as the year goes. It's hard to say, but excited to see that we're there now. So a few things going on in the industry. You guys might have heard of some of these carriers that are out there. Avelo is a new ultra low cost carrier. The founder and CEO of that is Andrew Levy, former president of Allegiant and former COO at United Airlines. This carrier is going to look a lot like Allegiant. They also have some other folks in the route planning that have come from Allegiant, so you're seeing people copying that Allegiant model. I think because it works. That's just a simple fact. So they launch service next week from Burbank, California to 11 destinations. That's their launch. They're going to be building mostly in the West to start, so we probably won't see much of them on the East Coast just yet. Breeze, we've talked about several times. That is David Nealman's airline. He's the founder of JetBlue, WestJet, Azul. He's done this several times, done this successfully, so no reason to expect he won't be successful again. Another ultra low cost point-to-point service. Surprised we haven't heard route announcements yet. I'm not sure what's kind of holding that up, but I'm thinking that kind of any day there you're going to see that press conference. What we do know is they are going to be more of an East Coast based to start, mostly north-south flow. Sounds a little bit like Allegiant, maybe there too. Again, their COO, Director of Route Planning, and Director of Government Affairs are all former Allegiant that we have great relationships with. So excited about that. What I can tell you about both of these, we will not be seeing anything from either of them very soon. They're not going to come in here and compete head-to-head with Allegiant right off the bat. Flip side of that is I do think we'll have some conversations with them in the not too distant future, maybe in wave 2 or wave 3 as things start to go well with them. So possibility that we'll see them at some point, just not today. ExpressJet, this one sort of came out of left field literally I think Sunday. Everybody was surprised to see this. They were a United Airlines regional carrier. We actually had ExpressJet here flying, I think, our Chicago routes. Back in June of last year, United made the decision to go down to one, consolidate their regional flying with one carrier. At that point, ExpressJet ceased operations. Everyone thought they were gone and never to come back. And Sunday they announced they've got 2 airplanes. They're going to start flying point to point, and I think they expect 10 by the end of the year flying. So no idea what their plans are, no idea how we may fit into those plans, but we're certainly kind of watching that. And like I said, this one really was surprising. I talked to our air service consultant, who typically when I ask him these questions, he knows what's going on before the announcements are made, and he said nobody knew. He said, you know as much as I do about this one, so we'll be watching that one and hopefully talking to them at some point just to see if there's any opportunity there for us.
What planes did they buy so far? What are the two?
They're CRJs, 50 seat.
Seaters,
The ones that they, I'm assuming the ones they still had, that they haven't gotten rid of since they were flying the Allegiant routes. But, so, I mean, it could be interesting. There might be some interesting opportunity there for us at some point. Maybe it's a way to serve some of those business routes that we've been trying to find a way. I just don't have any clue what their plans are.
So we don't sell fuel to these guys anymore, do we?
To
any of these guys? So was it $2.5 million we took a hit on with Hooters?
Oh, right.
Yeah.
Right. No.
Yeah, no, I mean, fuel goes through the,
Yep.
all we get paid is into plane on these. That goes through the fuel company. They take the risk.
Yep.
Yeah, we won't. I'm never a big fan of startups. I mean, these Available and Breeze are probably two of the, better odds that they'll keep going just because of the history that they have and the folks they have operating them, but it's still lonely side. I don't know why anybody would start an airline, let's just put it that way. You gotta be a special kind of crazy. All right, our Fly Local program.
Fly Local is an exciting new initiative here at OVE, and already one Lehigh Valley organization is ready to sign the pledge. Let's head into the boardroom to discover Lehigh Valley CEO and President, Alex Michaels.
Today's an exciting day for myself and for Discover Lehigh Valley, because today we choose to fly local with ABE. The reason I'm excited today is not only the ease and the convenience of flying through ABE, but we need to support our regional airport. So I encourage our Lehigh Valley businesses to take the pledge and to choose to fly local ABE.
People ask me all the time, how do we get more service? How do we get more destinations? And the biggest way to do that is to support the destinations we have today. Make sure we're flying those airplanes full of passengers when they leave the Lehigh Valley and full of passengers when they come back in. That's what will prompt the airlines to continue to add new service. And it's important that our local community supports the airport if we want to continue to see it grow.
So since then, we've actually, you may have seen Frank's video has been out on social media. He's done a similar announcement, and we will see one from LVDC coming out soon as well. We taped that one as well. So those three groups right behind the program, which is great. We're now starting to reach out to the business community, and well, obviously with the assistance of those groups to get the business community on board as well. So
When you collect your Emmy.
yeah, I think I got a little work to do. But yeah, Colin was the creative behind that. We'll put it that way. I love the way we did it, and I think it's been a lot of fun. And everybody that's done it's had fun with it, so it's been good. It's awesome. I think it's a really good idea. Yeah, these programs are great. They've proven at other airports to really help build air service. Again, it's really a marketing program. At the end of the day, we want to engage that business community. We figured this was the perfect time as things are starting to rebound to get this thing out there now and start. Again, like I said, we have some capacity now. We got to fill it. So. I love this quote. I can't even take credit for that. I won't tell you where I stole it from, but why is it important to fly local? Because airlines have flights where passengers board flights, but that is really true. I think a lot of times people think air service is a little more aspirational. We want service to here, the community wants service to here, and that's great. Airlines don't care unless they're going to fill the seats that are here already. So if routes aren't successful then here, there's no point asking for new ones. Just two more things. Very excited to say that there are some in-person airline conferences coming up. As someone who actually enjoys the travel part of their job, I'm excited to go to a couple of these. I'll be in Savannah in May at the Airport Roundtable Series. This is something we've attended several times in the past. It's kind of a more low-key chance to network with a lot of colleagues and kind of see what's going on in the industry, which I think will really be interesting now to see how people are kind of weathering this. But there's only a good number of airlines there as well, so we have 8 airlines attending there. Gives a chance to, like I said, a less formal setting to kind of talk to these airlines. And then Routes Americas, Routes does conferences all over the world. We typically go to Routes Americas when it's in a convenient location, when it's not, You know, a lot of times they'll do it sort of every third year in South America. We typically miss that. But usually if it's in the US or Canada, we have been going. And more important this year than most because Jumpstart, which you guys have heard me talk about, we typically go to. That is not happening this year. So this will be probably the one good opportunity.
Jumpstart canceled 2020 and 2021?
Yes. Yeah. So Roots, it's a similar setup to Jumpstart, so we'll have the same opportunity to kind of get in front of several airlines and have our, kind of 20-minute meetings with them and make our pitch and, at least, like I said, a chance to hopefully talk to all of our incumbent airlines or talk to some of these new ones out there as well and kind of get the lay of the land and figure out what's going on in the
Just
industry.
based on the previous thing that we saw with Discover and LVDC and with the Chamber, have you reached out to any of them about collaborating on these or material they collaborate with?
We always work with them when we put our presentations together. We even started to do anything we won't do any presentations for the roundtable because, like I said, that's much more of an informal setting. But for the Roots Conference, yeah, we definitely will work with those groups on the information and things for the presentations. So I think that's it. Happy to answer any questions.
Any questions for? Go ahead, Tara.
Yeah, so you said that you can increase flights when people are here, right? Is that just the flights to the destinations that we have now, or is that new destinations?
No, I mean, that's truly what airlines are going to look at. When we go asking for new destinations or increased flights, if we don't have good load factors here, those conversations are kind of dead on arrival. So, yeah, I think new destinations right now are probably not going to happen as quickly as we would like them to, just because of the state of the industry as a whole. But yeah, if we start to see these routes are all full, I mean, the simple fact is you want to see Dallas service, fill Charlotte, fill Chicago, and then you can get American to go to Dallas. Those are the types of things. If you're not filling planes to Charlotte, there's no point in adding Dallas because all that's going to do is cannibalize the Charlotte route that's already not successful.
Right. So somebody had approached me, and I shared this information, that we don't have a direct flight to Puerto Rico.
Yep.
Is there any time in the future that we would have a flight to Puerto Rico?
I hope so. I mean, I know Matt and I've talked about this. We've talked about this for years. Sam 1 is obviously at the top of our wish list. The biggest issue with Sam 1, there's not a lot of partners out there to fly Sam 1 from here. You're not going to get one of the major carriers that's going to do a direct to San Juan from here. There's just not going to, even with the population here and the demand, there's never going to be enough demand that's going to get an American to fly, a daily flight to San Juan or something.
Because they fly from Philly presently.
They fly from Philly or Newark, wherever those,
But with like an Allegiant? No.
Well, and so Allegiant had San Juan service from other locations in the past. It didn't do great from a lot. We had talked to them. I think we were probably about this close when the big hurricane hit. I can't remember which.
Maria.
I mean, I think literally that announcement was coming when that hurricane hit. We were going to get San Juan service.
Yeah, because we have a significant electrical.
Yeah, and we put that in front of folks all the time. The demographics sort of sell themselves for that route, but right now Allegiant's not doing anything to San Juan from anywhere again. They've kind of stopped that. From the conversation we've had, that's not something that they are not planning to consider in the future. So I think it's a possibility. Also, it could be where one of these new airlines come in that maybe there's something there at some point in time too with one of the new carriers. It's finding the right partner to do it. We all know San Juan makes sense from here, but again, it's.
So now it's just finding the right partner. It's not necessarily finding the desire from the community.
Well, you're talking about quantifying the demand here, and I think that's where I was going to ask you about the air service focus groups. I think you're talking about getting those restarted again.
We are, yeah, and that's what I need to connect with Frank on that because Frank had been our chair from the board, and Ann Baum was kind of the community chair, so I want to connect with them on that. Because I was going through the list the other day, I know several people on the list are no longer with the organizations that they had been and things. So I think we just need to kind of go through that list and re-engage certain folks and probably engage some new folks.
Particularly in the Puerto Rico service, I know that the team at LNAA, the radio station now in town, has significant reach into Reading and into Philadelphia as well, and I think they're eager to lend their voice and help quantify the demand.
And they have actually in the past. When we presented Puerto Rico to Allegiant, we had some help from LNAA the last time we kind of put a pretty strong pitch together for Puerto Rico.
Excellent.
So that's really good. With them. So yeah, it's definitely something we'd all love to see. I'm not going to lie to you, it's not going to be an easy one for us to get. It's certainly not even, like I said, the demographics sell it. It's just finding the right people to do it. So.
Yeah, and even if we have the the populace base that could support the flights, we also come into some other situations when we have to have cargo, or not cargo, but customs represented here.
Not for Puerto Rico.
Not for Puerto Rico, but, okay. So there wouldn't be that expense.
No, that's the one that's, you know, it's really, it's funny because it shows up when we do our leakage studies, it shows up as an international destination, not a domestic destination, but it is, you know, U.S. territory, so there's no customs.
Yeah, Puerto Rico shows up in census data as international immigrants, even though it's a territory. It's crazy, but
You're not there yet.
it will be soon.
You're getting there.
Any other questions for Darren related to air service?
I have another question.
Yes, go ahead.
So, you know how like in October of 2020, we were supposed to have real IDs? Is that like a thing again? Is that approaching? Like,
Yes.
what's the-
21.
Yes.
What's the new due date for that?
October 1st, 2021.
October 1st, 2021. And
Just
so
push back a year.
Okay. And so will we have things at the airport where people can come and get their real IDs, or is that something that they're just gonna do at the DMV, or?
At this point, they're doing all of that at the DMV. Yeah, when they were first introducing it, they had some pop-up events and stations and things that they were trying to do some document scanning at the remote locations. But once they had all of the DMVs either converted or they stood up a couple of new DMVs around the area with real ID capabilities, they stopped doing any sort of, external events. So everything has to be done through the DMV.
Okay, so by October 1st, will we require the real ID then to board a flight?
Yes.
Or passport.
Or passport. You're required to have a real ID compliant document. So passport, even a passport card, military ID, other different forms of government ID could be acceptable.
Okay. Yeah, because I don't know if a lot of people remember that, or, that seems like something we're
It's interesting you say that. The TSA has been talking to us. I know, Colin, you probably have some more information here, but I know they just are getting ready to push a big campaign to get a lot of information going on the real estate.
Well, we have a marketing update coming up next month, right?
It started in March, sort of softly, and then they're going to push it to June. They're going to start because obviously it's the TSA. We're not the Air Force, right? So it's a larger scale. PennDOT's doing the same thing. We've had our real ID stations up 2 years ago, and it's just been, we're actually the first airport in the state when PennDOT had their document signing or their document
pop-up event.
We're the first ones to have it, and PennDOT was overwhelmed. Actually, they sent one computer, a few people.
First
and there was 150 people in line ready to rock and roll. Yeah. So the next day was, because we had back-to-back days, they had 4 computers and 3, it started, I think a lot of people just got it, but slowly but surely you're going to see that start to ramp up as the summer begins and people are starting to travel. I'm sure TSA, as they were doing prior to, were reminding people at the TSA processing lanes when they came and presented their ID that the next time you travel, you'll need something real big. So you'll see a lot more ramping up.
Colin, can you send out to the board the information we'd have to take over DMV? I had that somewhere and I lost it.
Yeah, I'll resend it.
Yeah. Is it easier now, or did they lessen anything, or?
Same requirements.
Okay. Because before it was easier to get a passport than it was a real ID.
It was the birth certificate.
Which is kind of interesting.
It was the birth certificate that was getting, because they needed to raise seal and all that kind of stuff, so.
Yep, and it can't be laminated.
Yeah, and I think the DMV, the stand-up place they put has helped, because they just had the one DMV, but now they have real ID ones that you can go to, which
right.
makes it a lot easier.
Yeah, right on MacArthur Road is an actual real ID center here in the Lehigh Valley, so you can go there.
This was all state-driven, the requirements?
Well, it was based on a federal government mandate.
Okay.
So if you recall, actually Pennsylvania had to rescind legislation that didn't allow them to participate in anything like a real ID process.
The words federal government mandate to John are like red meat.
Or
like,
you get the state people
we'll be here until tomorrow if you keep going on federal government.
Reality.
But yes, it's all 50 states.
Yep.
Very good. Thank you, Tara. Maybe there'll be an update in the marketing update next month around that. Okay. I don't know if there's any new business for the committee? And if there's not, then I would ask for a motion to adjourn the business committee. And we'll roll, thank you, sir. And then go second from Tara, and then we can roll right into, if it's okay with everybody, we can roll right into our executive committee. And we have lost another, we should mourn the passing or disappearance of Jim Geisinger's term on the airport authority. I believe we do have a new appointment from County Executive McClure, which we're excited about, but do wish, I guess maybe in our actual meeting on Tuesday, we can say a word of departure to Glenn. But for the moment, we have 3 members of our executive committee, and they all appear to be present, but I'll just, for the sake of the minutes, do a quick roll call. Tara?
Matt Turk,
I am here.
John Hayes,
I am here.
and Tara Drinsky.
Wonderful. Okay, so we have 100% quorum. Do we have public comment for our executive committee?
No comment, sir.
Very good. And I will then assume that you all reviewed the meeting minutes from our March 25th meeting and ask for a motion to approve those minutes as presented in Novus.
I'll make a motion.
I'll second.
Thank you. Thank you. And I will ask for a vote to approve. All in favor, please say aye.
Aye.
Okay, 100% unanimous. We will move to approval of the invoices from Florio Perici for March 2021, which were also in Novus for your review. I'd ask for a motion to approve those invoices as presented.
Guess I'll make this motion.
Move to John.
I'll second.
Here we
Move to
go.
Tara. All in favor of approving the invoices, please say aye.
Aye.
All and any opposed? Nope. So those invoices are approved, thank you. And final item, I believe, are you going to describe this for us, Tom?
I can walk through this one as well. It's
a pretty cut and dry. We had a 2-year agreement with the Teamsters that was set to expire on June 30th of this year. Because of COVID, we haven't been able to do our traditional negotiations, so we agreed to do a 1-year extension. The only difference is that we would add in a 2% cost of living increase on 7/1. So that's the only difference from the existing agreement, and it would be extended until 6/30 of 2022.
The membership did vote. They've
already voted on it.
Approved that, so that's.
They've approved it, okay.
How does this expiry date align with our other union contracts? How does everything stagger out?
Not as staggered as they once were.
Yeah.
Correct. Yeah.
We have the fire is up next year.
Correct.
as well,
Fire department is also, their agreement is through into September.
So you're gonna have to negotiate 2 contracts next year?
I mean, they're slightly different dates. They're about 3 months apart, but yes.
That's a lot of fun. So how come you couldn't do that over Zoom? Other unions are doing their negotiations over Zoom with the bargaining units.
I mean, again, there's some challenges that we're trying to move forward. I mean, if you think about the things that we've been trying to accomplish, this is the only group that does not switch over to our new medical plan. They are the only group that has not switched over for new hires on the pension plan, which long-term is, we need to do that for sustainability. There's challenges involved with that. So again, face-to-face, being able to scream, holler, make your point, whatever you need to do, we just felt that let's do it when we can do more traditional, face-to-face meetings that would be better. And that was agreed on by both sides. So that's why we did it for 1 year.
But yeah, I see why they agreed to it, because they get the COLA and then they also get to keep what they have, right? So that's basically the thing, but now you can't negotiate.
Again, I mean, I think the amount of resources that is necessary, because you got to remember, there's a lot of internal resources that go into negotiation. We got a lot of other things that we're using those resources for right now to kind of get us through the pandemic. So scarcity.
They're good with this?
Huh?
They're good with this.
Yeah, they approved it.
They've already, their rep has already signed off on it for a year.
Awesome.
My concern is going back to the timing of the contracts having 2 expire, that close together puts us a little bit more at risk in terms of the negotiating process, because if both are out at the same time, that creates an ugly scenario. So if we could keep that in mind next year when we're negotiating these, let's really try to do everything we can to stagger out those.
But
expiration
they are.
dates.
That's always the goal.
We started out early, yes.
Certainly this, we didn't really have this one in the formula when we,
Yep.
Yeah.
when we stepped through it, but.
Well, and nobody wants to, I mean, when, nobody wants to negotiate off of a year like we just had.
No.
That's and so.
But they are, but, I mean, unions are, that's why I asked, because I just wanted to know how this affects
fresh
all
bet,
parties.
yeah, I don't know.
Like, not just the union, but like us too, like now it sounds like you're putting off negotiating things for sustainability for the airport for a year, but it might have a better outcome, given that you can do a face-to-face.
Correct.
I get it.
I mean, and again, there's pluses and minuses to it, but if you think of the internal resources, I mean, this particularly when you're talking about the teams, that's the longest negotiation process. That takes us the longest of all the ones we deal with. We started this, I think it was in February. Or even January, we had some discussions, and you know, we were talking about some negotiation, but there's still some heated points, and I think it's better to kind of deal with those face to face, and we can talk and hopefully come to some meeting of the minds.
Okay, so we will approve, I'd ask for approval, then we move this to the meeting of the full board on Tuesday. Ask for a motion to approve the one-year agreement with the Teamsters.
I'll make a motion.
Tara, thank you. John?
Second.
Second. Okay, all in favor of approving the one-year collective CBA with Teamsters, please say aye.
Aye.
Any opposed?
That motion actually, that's to recommend approval to the board, correct? We're not actually approving.
Yeah.
No.
We're passing that on to the board.
Yep.
Very good, thank you. That concludes our action items. Darren, do you have a development update for the?
Yeah, just a couple quick slides. No videos this time, though. No.
But there's renderings, so I mean.
There's renderings. I had to steal those, but they are renderings. Yeah, just Air Products. We are moving forward. I think honestly, in the last month or so, Ryan can weigh in. I think we've had a lot of positive movement, and we were a bit at a standstill, but I think things are going better now. Stormwater is just an ongoing issue. It's creating a bit of impervious, so we got to find somewhere to go with that stormwater, and just finding the right locations. And stormwater in airports is no fun either. So, but we're getting there. I think we have a plan in place, and like I said, Ryan's been working hard with them, with our consultants to help them out. So, utilities. I think we've also now pretty much identified all the utilities as of last night. What I saw they sent. So it looks like we found and figured out what's gone through there. Some will have to be relocated. Some of them are just old abandoned utilities, so that should make life a little easier. Our MOU with Air Products expires the end of the month, so we're extending that for another 90 days just to continue this until we're ready to get to a lease. They're going to relocate our vehicle service road, which was one of our responsibilities in the MOU. We'll just reimburse them with rent credits. That makes it a little bit easier again for us. They're already going to be out there doing the project. Let's have them do the vehicle service road at the same time.
So they're not slow playing it, no concerns in that regard?
No, honestly, I think they would love to have a shovel in the ground right this minute. So I don't think they're slow playing at all. I mean, you know how it is until they sign it, anything's possible, but I don't see where this.
But no indication in that regard?
Not at all.
Okay, good.
No, I think they want to do this, so.
They're moving on their headquarters, that's gonna be done by the end of the year, I would think.
Yeah. They kept working all the way through the pandemic, so
Yeah.
they never stopped. Thank God for the team, the construction teams working on it. Keep it moving.
What's the estimated reimbursement in rent?
Or I don't know what the actual ground rent is yet, because honestly, we don't know how big the site's gonna be yet until we figure out the stormwater and everything, so we'll know that.
Should we know some of that stuff?
Well, this will come back for approval. The lease everything will come to you for approval when it's all said and done. I think we had given estimates in the beginning, but honestly, I don't have it off the top of my head, so.
Oh, okay. Yeah, because I'm just thinking, like, I don't know, they could go real big.
I mean,
If they want to.
money-wise, it's
You're
not gonna be a huge
reimburse
number
them
for us,
for it.
because ground rent is just not,
So
the
it's
ground
not
rent
that bad.
numbers, it's not a huge money maker for us. I mean, the nice thing is they're gonna build a nice quality building that someday the airport authority will own. So.
Oh, really?
That's
Okay.
the way this works for us, so.
They're gonna put all three planes here, right?
They only are, actually, they only have the two. The third one is gone. The third one was on a lease, they had moved it away. I think it's gone at this point, so they have the two at this point, so, as far as I know.
Steffi's plane and everybody else is playing?
Yeah, pretty much. I think that's the way it goes.
So if they put the building on our ground.
Yep.
They pay us rent to come in and do their
when they leave the towers.
Yeah, like in 10 or 20 years.
30.
30.
It's a pretty big investment though, so.
Yeah, you gotta have a long enough ground rent or lease to make it worth building the building. If the lease is too short, it's just not worth it.
That's what I was thinking.
even
I was
30.
like, wow.
They
Already
went through
pushed
this
it.
length with Ted Rosenberger when he wanted to build over Queen City.
They would like to have, I mean, they would want 50 for sure if we would give it to them. 30 was just, that was no way we were going past that, so.
Because then we're going to inherit a building that's 30 years old.
Yeah, in other words, there are provisions in the lease for that though as well, so where they have to maintain it, we'll have the ability to take a look at it prior to that turnover date, and they'll have to, repair things and whatnot, so we don't get garbage back when it comes back.
Yeah.
I
Do you
think
have any input on how it's built and stuff like that?
We'll review, all plans, everything we are subject to
just
a review.
yeah.
Yeah, but again, we're not gonna let them build something that we don't want.
Of course.
Yeah. And honestly, I don't expect that our products will
Air
build
Products
anything that
is
we
not
don't want.
We're not gonna build something,
Exactly, I think this will be an incredible facility when it's all said and done.
It looks really nice.
And these are just conceptual renderings, but I assume it'll be.
So this isn't anything actual that's planned? This is just,
They've done conceptual plans, they are trying to get through the stormwater and all that, and then they need to rebid their design build firm that they had done in the past, but they need to rebid it because it's taken so long to get through stormwater and all those issues.
Helicopter?
They have talked about that potentially, so they wanted a helipad, which we're not gonna do, but they actually can operate the helicopter off the apron, so.
They're gonna have that. Seffi doesn't like going in traffic. Yeah.
That was kind of I figured that too, that was.
Yep.
right now they'd be happy just to get back to some schedule, I know.
Yeah.
Their flight schedule's been impacted just like everyone else's.
Very good.
great.
Majestic, again, positive motion here as well. The agreements are in final draft. I think there was literally one open item that hopefully the solicitor's office should be speaking with Majestic's attorney to address, but I don't think it's an issue at all. I think we've got agreement on the concept. They just need to put words. So those are done. We have the FAA summary document that we got something from Majestic, very detailed and a lot of information. We pared that down quite a bit to try and make it easier on the FAA and have sent that back. I know Majestic has read it. I think they're, for the most part, good with it. We're just trying to connect their FAA counsel with our folks just to go through a couple of questions on that. So I think that should be done as well. We are coordinating a meeting at this point in time between the FAA and the LNAA staff to go through these and ask them for some review on that. So it's just now timing on when we get that meeting. So we have the folks at Kaplan Kirsch are trying to coordinate that for us at this point in time.
You have an anticipated date?
Don't have one yet.
Time frame?
As of yesterday, what I was told was there's still a lot of transition going on at headquarters, so it's just a little touchy as to how long it'll take to get us in there. But we've said let's get it moving because I think we're ready, or we'll be ready by the time they get us on a calendar. So certainly keep everybody up to date on when that happens.
Without creating too much of a diversion, just real quickly, the FAA transition, have we had largely positive interactions with the new FAA? Is it looking different from the previous?
Most of our contacts haven't changed.
Yep.
So I think, it's been pretty status quo in that regard, but, I don't know.
I think this is just some of the headquarters folks that we would try to engage.
Yeah, it'll be a little different, but.
Wonderful. Thank you.
As you know, you guys approved the AFCO Master Development Agreement last month. That was executed on April 1st. Spoken to all of our cargo stakeholders, let them know that we've engaged AFCO. Mixed response, but I would say generally positive response. AFCO development team will be on site next week for kind of the kickoff meeting, site visit, and just sort of the next date for this would be that master development plan due by the end of the year, by December 31st. So hopefully we'll be back with that before that, but that's the outside date that we need to have it done by. So not, like I said, we'll definitely keep you going, keep updates each month on that as things are progressing. And that's it. One other topic we can discuss when we go into exec session, but just very briefly.
Okay. Thank you, sir. Larry, so we did have a slight tweak to our nominating committee. Glenn Geisinger had chaired that committee because County Executive McClure appointed Ms. Godshall to replace Mr. Geisinger, I asked for, that left us without a nominating committee chair. I asked Mr. Hamburger to step up and become the chair of that committee, and we added Mr. Dowd to that committee to make sure we had Northampton County representation. And I believe the nominating committee has reviewed, previously the slate included a continuation of our existing executive committee, which obviously we cannot do any longer because Mr. Geisinger has been replaced by Ms. Godshall. So the nominating committee took a look and is proposing a modification to that slate that we would then vote on in our Tuesday board meeting. But Larry, do you want to fill in any gaps there in information?
No, you've hit it quite well for the most part. The revisions would be John Hayes would be the vice chair, and Brian Damons would be secretary treasurer. That is how we would present that.
And we would continue with Ms. Zirinsky as our Northampton County representative, and as in the previous slate, Mr. Stershik would be our Lehigh County representative.
That's correct.
Okay, good. Thank you. Well, and so that's something that we will present to the full board and vote at that point. And I think we'll have to do because of the county situation, we'll have to do a 1-by-1 roll call vote on the acceptance of that. Very good. Okay, thank you, sir. Is there any new? Yes, sir.
One quick thing. I just wanted to compliment the folks that I contacted to serve. We're more than energetic and enthusiastic to be an active part of this board. So thank you very much.
Thank you. Thank you for doing that for us, Larry. We have no new business, I believe. We do have a small matter for which we'll need to enter into a very brief executive session. Judge, could you please describe the need for that executive session to the
I'm going to discuss with an executive session the status of pending litigation. As to the other matter, I haven't been informed. I'm not sure what that is. So will you state what?
Just an informational update, Judge, on the other matter.
Okay.
Real estate.
There'll be no vote or discussion. It's an informational update, and that's permitted under the Supreme Court decision.
Very good. And then when we do exit executive session, we will just adjourn from that point. There will be no additional action needed. So,
before we go into executive session, can I add to the nominating committee report the following? I want to clarify that nominations from the floor are permitted, and secondly, I want to clarify a point that perhaps was misstated last time. There's no need for a second to any nomination. Simply a nomination for the office is sufficient. And the second is not required under Robert's rules.
okay. Very good. Thank you. I would ask for a motion to enter into executive session.
Go ahead, you go.
Quick one.
I'll give it to Tara and